Hello folks, this is Raj Sastri from Raj Option Trading. Today I want to talk about option trading ideas for the next week, which is week of March 15th. With that, let's look at a couple stocks and see if we can do some option trading idea. So first is AMGN. AMGN is in the healthcare sector, as many of you know. And as you can see here, 1 year chart, stock is kind of trading sideways a little bit, trying to bounce at this point. So what we'll do for this stock is look at Amgen, from a John Carter's TTM squeeze perspective. So if you look at the stock here, stock is trying to make a comeback, and if you look at the TTM squeeze itself, it's trying to gain strength here. As you can see here, the yellow bars are becoming shorter and shorter, and in maybe a couple of days we could see the squeeze forming, which is a red dot here, which is a bullish sign. And as you look at the TTM wave, which is shorter term, it's trying to go above the zero line, which is again a positive trend. And here also the longer term wave, it's negative right now, but trying to get to positive level, which is a good sign. And if you look at the 2-day chart here, 2-year 2-day, same story. We got a yellow line forming, indicating really there is some positive momentum going on. And on the shorter term wave here, we got shorter yellow lines forming. It's trying to go above zero in a couple of days, and the longer term it's about zero at this point. So it's a kind of trying to get to bullishness, as we can see here. And we have a squeeze in the weekly chart here. We got a squeeze. I think it kind of became positive with the shorter yellow bars. Now there is a squeeze. And the longer term wave is above zero, which is a positive sign. And we also have a squeeze on the longer term chart here, and the longer term wave is above zero. So with this, we feel like, hey, it's a bullish sign, and we could really, trade long. If you're a stock, if you want to buy stock itself, you could initiate a small position around 230. If you want to buy options, you could buy options somewhere in July 16th timeframe, because you want to give yourself enough time. So if you go to July 16th, depending on how you want to trade, stock is at 230, all-time high is around 52-week high is 276. That gives plenty room for this stock to run if it does well. And also let's look at one more chart here. Let's look at a one grid chart here. This is a 1 year chart. Let's put Amgen here. So if you look at this chart here, Amgen is trying to become positive, and the volume itself is, I think it's trying to, it's kind of doing okay. And RSI is trying to, gain some momentum here. DMI itself, the blue line crossed the red line, which is the positive news. And implied wall, I think it's kind of trying to, go a little bit higher. No big deal here. So I think it's okay at this point. And if I go back here and look at this stock here, stock is at 230. So what we could do is, depending on how we want to trade, if you want to buy option, I would I would suggest maybe delta 72 or so option. You could buy this just a single call option, and you have to pay $27, as you can see here. This is one way to play. Maybe for larger accounts you could just go ahead and confirm and send. As you can see here, your profit is infinite, and your loss is whatever you're paying for this call option, which is 2,755. Buying power effect is 2,000. So you could certainly do this on a little bit bigger account. Other strategies, if you have a smaller account, you could even do some spread. Right now stock being at 230, you could look at maybe say 220 and 250 spread. So you could buy a spread and say 220 and 250. It's a $30 spread. So you're paying $13, which is a little bit less compared to the previous one. And for this year, as you can see here, your maximum profit is 1,667, and you're paying $1,300. You're actually doubling your money in that sense. If the stock goes above, if the stock stays above 233, which is $3 from now, in next 124 days you'll break even. If it goes higher, higher than 250, you'll make the entire profit. So it's a good way to play if you have a smaller account size. And even if you want to, if you still have a smaller account size, if you want to still stay small, I would suggest a $10 spread. You could do 225 here, say 225, and do 235, which is really $10 spread here. If you do $10 spread, you're paying very less. It's 433, and if you confirm and send here, you're paying 433 and you're making 567. So you're making not double, but yeah, you're making double, meaning you pay that money, but your profit is 567. So it's really one way to play for a smaller accounts. So this is, we also call it in-out spread, meaning you buy one leg, in within the current stock price, which is 225, and you buy another, sell another leg outside of the current stock price. In this case, stock price is 230. You're doing 235. So this is one way to play for shorter or a smaller account size. So this is one idea, AMGN. Let's look at next idea. For the next idea, let's look at McDonald. McDonald is a recovery play, as you know. And if you go to chart here, for McDonald, um, as you can see, your stock has been kind of trading sideways, and relative strength index is trying to gain some momentum from an RSI. So from a DMI perspective, the blue line just is above the red line, which is a positive sign. So there are some good indications here. And if I look at John Carter's TTM squeeze indicator, so we are trying to form a squeeze here. We are a little bit early. We are catching it early. And same story here. It's in a weekly, 2-day chart. It's becoming bullish. It could form a squeeze as we go forward. So there are some good indications here. So if you want to, oh sorry, this is different stock. If you look at a McDonald's, so there is a, the 1-day chart. It's getting bullish. It might make a squeeze here, and in a 2-day chart, it did make a squeeze. And as you can see here, the long-term wave is above zero, which is a long sign or a bullish sign. And we have a squeeze in the weekly chart, and long-term wave is above zero. Short-term wave is getting momentum on the positive side, and we also have a squeeze on the monthly chart, and long-term wave is above zero, and there is bullishness in the short-term wave. With this, McDonald's seems to be a good stock to play. So with this, let's see what we can do with the McDonald's stock. So if I go to trade grid here, 212 is the current stock price. All-time high is 231. There is about $20 range, for it to reach the 52-week high. So I could go 96 days out, which is over 3 months. I could do similar things, because stock is at 212. On a larger account, I could go to delta 70, say somewhere around 75 is close enough. I could buy this call option, single, and I'm paying $21 for this. I could confirm send. The maximum loss is money I am paying for the stock option, and maximum profits in infinite. As McDonald's goes up, we will make a lot of money. And This is one strategy. But if you're if you have a smaller account size, you could do a spread, just like we talked about earlier. For the spread, I would probably look at 210 as an example, or even 25. So if you go to 205, well, there is no 205. I would do 195. So if you do 195 and maybe 210, that's a good spread, or 220. So 195 and 220. There you go. It's a $14 spread here. So if you confirm and send here, you are paying $14 and you're making 1040. So 1040 will be your profit if the stock reaches above 220 in 96 days. But you don't need to wait till the expiration date. If the stock bounces, you could sell the spread and make some money in the meantime. If you're a little more bullish, you could even do a little different. You could do 220. You could do a spread at 210 and maybe say 210 220. It's a $10 spread. You're paying much less here. You're a little more bullish here. You're you're paying 445. You're making 555 profit. It's a little bit better option, I would think. Maximum you lose is 445, but you'll make much more. This is another way to play. And third way to play could be, you could do a 200 220, which is a $20 spread. If you do 200 220, you will pay $10, but you'll make 915 profit. This is another way to play. Depending on your account size, you could do outright call option. You could do call spread, various width, and take it from there. And if you're a stock buyer, you could initiate a small position, buy some McDonald at this point, and keep it for a long time. That's another way to play. So third stock is Cadence Design. It's into design, and it's a good company. It's one of the best places to work. It's $125. All-time high is 149. There is some good room to run. And if you look at the chart here, so Cadence Design, let's look at so Cadence Design, as you can see here. So we have a probably, as you glean through this, there's nothing much going on in 1-day chart. In a 2-day chart, it's nothing much going on here. Same story in a weekly chart. But by looking at this, at least in this chart, from a TTM squeeze perspective, there is nothing much. If you go to a different chart, which is one grid chart, you could see here you could kind of see a stock is kind of making its down, but there is a bullish signal here. Implied wall is low. That tells me, hey, good to buy option at this point. So with that, oh, sorry, this is a different stock, CDNS. So CDNS, as you can see here, the blue line just crossed above the red line, which is a positive indicator. RSI shows it's oversold, which means it has a room to bounce back, and implied wall, as you can see, is low. So with this, as an option buyer, it's a good for option buyers. Or even if you want to buy the stock outright at this price, you could initiate a small position. So as an option play, we could go into 159 days out, 20 August. Stock price is 125. So I could do two things or multiple things. I could buy Delta 74 call for $22. So if I do something like this, I'll get infinite profit potential. If stock goes by $1, this option will go up by 74 cents, which is a good play. If you have a smaller account, you could even do a little differently. You could buy a spread. For that, I would say, depending on the size of the account, you could do even 115 as an example, 115. And you could go out to 130, so it's a $15 spread. So if you do something like this, you're paying $7.95. That's your maximum loss, and you're making 705 profit. So this is one way to play. So you max loss is this, but you can make money, and you don't need to wait till expiration date. You could sell it in between. Other way to look at this is really be a little bit more aggressive. You could do 120, which is just below the current stock price, and you could do 130. So for this you're paying $5, and you got $5 more to grow into. So you're paying 500, you're making 500, which is you're kind of doubling your money in this scenario. So which is a good story. You could do something like this. For the third idea, we'll go into Facebook, our favorite stock, social media, Mark Zuckerberg. So Facebook, as you can see here, $268 stock, all-time high is 304. It's a good play here. So I could look at the chart here for Facebook. Chart kind of tells me the blue line in the DMI went above the red, which is a good sign, and RSI is gaining momentum, which is again good sign. And on the balance volume itself is kind of going up, which is a good sign itself. Implied wall is kind of low, so it's okay to buy options at this point. And if I look at John Carter's TTM squeeze indicator and Facebook, TTM squeeze indicator is telling me that it's a daily squeeze. It's bullish. The yellow bars are becoming shorter. And in the longer term wave is above zero, shorter term wave is above zero. There's a squeeze at the two-day chart. Again, bullish here, wave is above zero. And there's a squeeze in the weekly chart, good sign. And the wave is above zero, longer term wave, shorter term wave is getting to bullish. Good time to buy a call or a call spread. So here again, depending on account size, if you have a larger account size, you could buy a Delta 70 call, something like this here. You're paying $36, and you're making infinite profit if the stock moves up. If stock goes by $1, you'll option will go up by 70 cents in this scenario. So this is one way to play. Other ways, you can do a spread here. Stock is at 268. So if you're a bullish, if you want, maybe what you could do here is you could do 260 to 80 spread, which is a $20 spread. You could buy that. Okay, for this spread, you're paying $9.70, and you got, you are going to make 1,030 max profit. Break even is 269, which is, hardly $1 away. So I think it's a good play here. You could do something like this if you have a smaller account size. So third play, we look at Lockheed Martin, LMT. Lockheed Martin is again a good defense contractor. If you look at the chart here for LMT, there is a squeeze in the daily chart, and it's kind of the bars are becoming smaller and smaller. It's kind of telling me that maybe a chance this may become bullish, and it might go above zero. Now, according to John Carter, we should look at this longer term wave to be above zero. In this case, it's below zero. We are a little bit early to buy this stock, which is okay. So next we look at 2-year chart, 2-day, 2-year, same story here. It's becoming bullish. There is a squeeze already formed. Shorter term wave, is above zero. Longer term wave is trying to get to above zero. We're not there yet. And on a weekly chart, the yellow bars are becoming shorter. It's trying to tell us, hey, it is becoming bullish. And same story here. Yellow bars are becoming shorter, and here wave is below zero. According to the methodology, it's not advisable to buy, but we can take a chance here, especially if you want to do a spread. It's pretty okay. And same story here. It's a little bit, the bearish when it comes to a monthly chart here. Um, and but if you look at the wave, longer term wave, it's above zero. For something like this, we don't have a clear indicator, but we know there are some bullish signs here and there. We could look at one grid chart here to really see here LMT and see what we can see from here. So if you look at this chart here, on the balance volume is going up, which is a good sign. And in the DMI chart, the blue line is above red line, which is again a bullish sign. RSI is trying to, it's kind of gaining momentum, which is again a good sign. Implied wall is low. That kind of gives us some good indication that, hey, you know what, there's a good chance this stock will bounce back. So what I would do in these type of scenarios, I would not just buy a call option outright. Instead, I would do a spread. So $340 stock, all-time high is 470, long way to go. I could go around 340 here, maybe 335 is good. I will go 335 and buy a spread here and go to maybe, give a little more room. I would go to 350 here. So, good $15 spread here. I'm paying $7 here. And I'm, making 725. So it's a good spread. I would do something like this for this stock. So these are the ideas based on John Carter's methodology. Next, what I would also do is I would look at some of the beaten down stocks. For that, I would look at some of the beaten down stocks. One is Acadia Pharmaceuticals, ACAD. And if you look at Acadia Pharmaceuticals here, stock has dropped like a rock. It was trading very well. If you go to chart here, stock dropped so much in a single day because of the FDA approval, or actually FDA asking for more information. Stock dropped. So what I would do in this scenario is I would, by looking at this, there is at least some bullishness, or maybe a semblance of some bullishness, because stock is trying to become stable here too early. Here again, I would do a call spread here, especially because if I go here, if you see, say, 96 days out, implied wall, IV rank is around 100. So IV rank being so high, I would not be buying a call option outright. Instead, I could buy a stock. If you want to buy some stock, that's completely okay. You are not impacted by implied wall. But if you're doing an option play, I would, maybe go 96 days out. I would do a spread, because the moment you do spread, the impact of volatility will be low on you. So I would buy maybe say 20, right here, 20-30 spread I would do. So if I do 20-30 spread, I'm paying $4.60 here, so not bad. So I'm paying $4.60. I'm making 540, and my break even is 24. So it's a very good setup here. I could buy this and go from there. It's really a play on, stock dropped so much, and generally there will be a bounce. How can I take advantage of stock bouncing a little bit? But at the same time, I don't want to buy call option outright, because there is huge theta decay, and I want to avoid the theta decay. This is one way to play. Next, we'll look at one more beaten down stock. That's Celsius. Holdings. So this stock after the earnings, dropped hard. So what I would do is I would look at the chart very quickly. Celsius Holdings. So if you look at the chart here, stock dropped huge here. And what I'll do, I will also add one more indicator here. I would add a Chaplin money indicator or check-in money. So I got check-in money somewhere. Probably it didn't show up. All right. So if you look at CELH, we got a 1 year chart, 1 day, 1 year chart. Stock dropped after the earnings. As you can see here, RSI, Relative Strength Index, completely oversold territory at this point. On the balance volume is kind of going, it's kind of flat, I would think. And as you can see here, implied wall is down, understandable after the earnings. And we got a check in money flow itself, it's showing some bullishness because people are buying it for long term after the big drop. For a stock like this, our place, stock will bounce because it has dropped so much. And if you see here also same story. The volatility is high here. There's a 99.72%. Which I would not be, buying the call option outright here. I would do a call spread. So for that, I would do a 40-50 spread. Stock is at 45. I would do a 40-50 spread. So if I do a 40-50 spread, there you go. I'm paying $3.95, and I'll be making $605 if stock bounces back above 40, above 50 by expiration. I don't need to wait till expiration. I could sell it before as stock bounces and make some profit that way. So next idea is along the same lines. We got Oracle, which is one of my favorite stocks. Steady Eddie, goes up slowly, without too much hurry, I guess. So Oracle also dropped after the earnings, as you can see here. It's at 73, and you know it's kind of oversold at this point, as you can see here. And Jacqueline money flow, I think money is flowing into the stock. Balance is on the balance volume is also okay. So with this, if I go to trade tab here, implied wall, as you can see here, 31%, which is not huge. For this stock, you could even do a single call option, not a big deal because implied wall is low. For that, if you want to do a single call option, I would buy Delta 70 or Delta 78. You're paying $6 and 60 cents. You could buy this. You'll make money as Oracle stock goes up. For every dollar, you'll make 70 cents. And if you're a little bit conservative or a smaller account, you could even do a 60-70 spread, or even 60-75 spread. Either way, if I do a 60-70 spread as an example, um, I'm paying $5.71. Remaining portion of this $10, which is about $4.29. That will be my profit. If I go and send $429 profit, I'm paying 571. That's the max loss. This is one way to play. But if you're a little bit bullish about Oracle, you could even do 60. Let's see here. 67.5 or 62.5. You could take this spread here. If you do 62.5 spread here, there you go. And now you could do a little higher. You could do 72.5. So for this, you're paying a little bit less, 466. and your profit potential is a little bit more. So this could be a good way, better than the previous one. Oracle stock, hopefully it's not going to drop below 62. It's got solid leadership with Larry Ellison and Safra Katz, so it's a good play. They also got data center. They are going to provide data center capacity for TikTok. They're trying to become relevant in this market. So that's the third idea, and the last one is probably Sumo. Sumo also dropped so much last week. It's again into cloud and software, and if you look at the chart itself for Sumo, it's dropped so much as you can see here. And the idea here is same. Hey, stock dropped so much, it's completely oversold as you can see from RSI, and there is some indication from the check-in money flow that hey, it's money is trying to flow into the stock. So it's really contrarian way. You don't need to risk too much. You could buy a spread here. Same story. Stock is at 21. Implied wall is high. Because implied wall is high, I would not buy a single call option. Instead, I would buy a spread. So stock being at 21, I could do 15 and 25 spread. Um, 15 to 25 spread, $4.25, not big. By paying this $4.20, that's the max loss. If stock goes above 25 by 159 days, I would make $580. So I don't need to wait till that time. I can sell any time. If the stock bounces, make a small profit and take it from there. So with that, these are the ideas, for next, trading week, which is March 15th. And just to summarize, these are the stocks, ideas. This is based on John Carter's methodology of TTM squeeze. I could, basically look at these stocks. I could buy either a single Delta 70 call or a in-out spread, like we talked about earlier. And if you want to look at some of the stocks that have dropped so much, the stocks in yellow, blue, these are the beaten down stocks. I would buy maybe an in-out spread for this, hoping for a pop. So that's the quick summary. You got two types of trades here. One is TTM squeeze. Basically hoping stock will shoot up because it's trying to go out of the Bollinger Band. And even Akamai, Arrow, Solar Edge, same story. It's a TTM squeeze play. And the ones in the blue here, these are really a beaten down stocks. You could buy a spread hoping because these will typically bounce back. VIX itself, VIX is trading at around I think 20 right now. You could do multiple things with VIX. If you think there is a stock market might crash, VIX being at 20, you could do a spread here. You could do 15, 25 type spread, or you could even buy VIX outright at 13, expiring in 120 days. If VIX kind of if the stock market crashes or comes down hard, you'll make money because you bought some VIX. So these are some ideas for you for next week for option trading. And many of these, you could also buy stocks in a little bit proportion, keep it for long term. So either way, happy investing. Thank you.